Well, hello, Maverick traders. Welcome to the Market Roundup. Joe with you here. It's the 17th of September. It's a Tuesday going into the Fed meeting Wednesday. We've been waiting for this for a while. You guys know the drill. Take responsibility for whatever you follow along with these courses. I'm going to break down the meaningful news of the day. Let's take a look at the markets technically, and we are going to go share some trades with the community as always.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As we move into the market analysis, you're going to see that we just kind of hesitated. That's to be expected coming into a FOMC meeting, which is, deemed one of the most important we've seen in years, right? First time we're actually going to cut rates. First off, let's break into the news. Flattening in the markets going into tomorrow's FOMC statement. I've seen flattening over the last few days. It's been interesting to watch these markets come off of levels. It's just posturing. All three markets are at some serious key levels when it comes to their overall pattern. We'll take a look at two of them. But the small uptick in the VIX today as well, it was about 3% and about 17, right in the 17.5. So it's not like a major fear factor, but there is definitely some posturing going on ahead of this announcement. So we should expect that. How do we finish? Well, look at that. Flat. Dow, S&P, Qs pretty much flat. The Russell actually up 1.74%. Oil had another bounce today at 1.78. I have seen oil super volatile for a little bit above 70, below 70, back and forth, but I've seen it $68 to $71, $72 a barrel back and forth over the last 3-4 weeks. Gold also kind of flattening out. We've seen a big move back and forth in the bond markets. I think that's going to be pretty much the biggest reaction. A lot of posturing going on when it comes to, is it going to be a 25 basis point cut or a 50 basis point cut? And I think the bonds have been the most active when it comes to kind of getting ahead of it. Moving over to the advanced decline line, you can see 52% advancing, 43% declining. Pretty much flat across the board there. 67% above the 50, 33 below. And kind of a nothing day overall. There's really nothing to really get out of it. So here we are, folks, back up to the exact spot that you'd expect us to be going into a FOMC statement. And there it is, right there. Really good recovery here. And this is definitely glass half full. This is an ascending triangle pattern back up to resistance levels that we saw in mid-July. So it would be very easy for these markets to take whatever news happens as positive and continue its surge further, especially in the S&P. Now, it's a little different when we take a look at the Qs. And I'm really not going to go too much past that. I'm just going to basically chart this, folks. If you know me by now, sentiment does what sentiment does. I don't really care why it does it, but I'm sure as heck just going to sit out and let it play itself out. So we have kind of a descending highs here. We still have that kind of a crossover on the 2050. Now, it did set a higher low, which the rest of the markets did, but there's an area here that it's a key point, I believe, for the Qs to where it needs to sit. So this is definitely a little bit more ominous than the SPY and especially the Dow, which once again is back up to its all-time highs. I had a red candle today, but it's just kind of hovering up there. But you got some different stories going on. Now, that doesn't mean that this can't immediately turn around and just shoot straight up if sentiment wants to be bullish. Now, if it doesn't, I could see a bunch of selling coming in and it rolls over. But once again, what's funny, folks, is I don't have to sit here and guess. Tomorrow is going to tell me what's going to happen, and I don't have to anticipate. Not a lot to really gain or lose from that. Let's move over to the heat map. And it's pretty much that grayish brown, a little bit of green, a little bit of red, but no bright reds and no bright greens, right? Just a little bit of a push here, a little bit of a pull there. Stuff kind of going into a median area. These stocks are kind of finding a nice, comfortable place to where, hey, let's see what happens, and then boom, we'll explode maybe tomorrow. We'll see. So where am I at? I'm just going to chart it, and it's pretty easy to do, folks, because we've just got this beautiful high base going on in the SP. And I just have to stay bullish. It's an ascending triangle pattern. I got it as +1 for the week. The 2050 slope isn't quite there. They are crossed. They're both kind of flatlining, but I'm a +2. definitely over the month. Now, that could completely change in a matter of a day. It just depends on what sentiment wants to do with this number. And I'm not here to play that game. I am sitting out. I am not making trades tomorrow. And I'm just going to sit back and see what happens. My outlook is based on my charting, and it is definitely at a +2 for the month. So I wanted to take a look at some of the trades that have been kicked around over the last few days with Maverick here and kind of give you an example. DHI, 3M, CNK, still bullish. Capital One Financial, kind of sideways, having a bullish move, but still in its pattern. Micron, Coin, LRCX, I mean, still bearish. Nothing's really confirming in either direction, but I kind of wanted to show you, hey, nothing's really changed, but things are definitely taking a break and consolidating ahead of this number. So let's jump over to the bulls here. I've got CNK, and I think what's really cool about this is it had a really good move to the upside. It's plateaued. It had a good move, and it's just chomping around here. So I'm seeing a whole lot of hesitation. I'm seeing a whole lot of, look, I'm gonna stay in this pattern. A lot of the trades that we had bullish and bearish are still bullish and bearish, but they just really haven't broken out or done much. And I truly believe it's just waiting for tomorrow's number. So this is still on my list. I still like it. It's a nice high base. There's plenty of potential there when it comes to a breakout, a high base breakout. We could do diagonal stuff. However, this could collapse tomorrow. Why? Well, that number could be perceived as or super bearish or worry or fear. Small uptick in the VIX. Once again, folks, we bumped up to about 17.5, maybe mid 1775, somewhere around there. Doesn't mean that we're going to fall apart, but I could see the initial reaction being overdone. The majority of the time with a number this anticipated, regardless of what it is, it's usually overdone. So let's make sure that we try not to make any decisions tomorrow. Please don't. But here's CNK, still looking like a really good bullish trade. Here's Capital One Financial. This was, I believe this was on the weekend class. This was a sideways trade, and guess what, folks? It's still sideways. A good move to the upside. Not a lot of volume with today's large candle, but I just think it's posturing based on, hey, I think it's going to be bullish or bearish, or it's going to make money or lose money. The market's going to fall apart or not. It's just posturing. So it's right in the middle there. It's still working. Give it 1 or 2 days after the announcement, but guess what? It's still a decent sideways trade. Let's move over to the bear here, and I pulled Micron, it looks like. Yep. So Micron still looks really good. It's been chomping around here. Moved to the upside, gap down, moved to the upside, gap down. So it's trying to kind of play that 90 level, but it's not like it's super strong or outperforming or falling apart. It's just, once again, staying where it's at. We'll see what happens with sentiment over the next couple of days. I don't think tomorrow's really going to help at all, to tell you the truth, folks, and that's where I'm going to end it. So the markets will need to play out, and I say this play out, it's going to be a reaction to the posturing the days before that this announcement happened. People will be wrong. People will be right. They're going to be taking profit. They're going to be scrambling around to, oh, geez, let's move it from here to there. And it's just chaos, and it will be. But none of it matters. It's all sentiment will play itself out over the next few days. What's really cool is this is a Wednesday. We got a Thursday, Friday. The majority of the work that we do here at Maverick, and me personally, is over the weekend. So sentiment will be easier to gauge later in the week. So, hey, you've got your stops or you've got your position sizing, you've got your bulls, you've got your bears. Just sit back and see where this goes. Economic reports, FOMC rate decision, that is all that matters. That's all that's going to happen. And if it matters or not, it's so built up. It's so built in. Folks, this is the first rate cut we've had in a long time. And what Corey said, I'm going to echo that. When the Fed starts to ease, it's over a process of time. So if you cut 50 basis points, there's an aggressive move there that is projected in the future. A 25 basis cut point means, hey, we're right on track. We'll just slowly ease. So they're going to continue to cut until they see the economy stabilize. That's what we're going to see the reaction to. Now, whether that's bullish or bearish or somewhere in between, it doesn't matter. Let's just follow the markets. Earnings, go ahead and check them. They're still out there. We're out of the earnings season, but yeah, they can pop up. But I think tomorrow is going to speak for itself. That is definitely going to be driver for the rest of this week. Personally, folks, just sit back, take a look at it. Don't be too aggressive on putting new positions on. Even if you have an unbalanced portfolio, just let it go. We got to let sentiment kind of play itself out. We do not want to buy into this volatility or try to guess where it's going. Always best just to sit back, keep your powder dry. I'll take a look at it after the weekend. Thanks for joining me, folks. We'll see you tomorrow. Bye, everybody.